the S&P 500, the Nasdaq 100. That's what we're going over today. Now, we had some interesting price action going into Friday and primarily throughout this week. The biggest things, though, going into this coming week, CPI data. And when we talk about CPI data, I think this has potential to shock. And we're already kind of pricing a little bit higher than expected, right? We have the adjustments have already been raised, right? So very interesting moment that we're going to be sitting in, because the question now is inflation resurging? Primarily with what's happening to oil. We'll get to that. Now, the first thing before we go into anything is going to be what's happening here with ES. Now, giving you a basis of these levels. I zoomed out to about in the 4 hours so you can see. We kind of broke down. We bounced. We broke this level. We kind of held here. So we that 40.60 to 40.70 range that we've been watching. 40.60 being the key level we've talked about. Going into 44.95. For 44.95, giving you guys a visual going to the daily level, you can see it's our line in the sand, right? We either want to see a break, retest, and push, break, retest, and push to the downside. Either way. We've also been kind of showing you guys on Twitter, so make sure you're watching what we're doing there. The link is down below. So that's where you're at and kind of how you're acting. Now, I do want to paint the picture here, right? Give you a few visuals, and I want to make them really, really clear for this week. But before we do that, I have to ask you to do two things. Consider liking and subscribing. Helps out tons. I appreciate all the love and support. You guys are awesome. You're killing it. Appreciate it. The newsletter every single week gives you a visual, what we're looking for, the charts, everything in between, indexes, futures, everything, right? Comes out tomorrow morning, 10 a.m. Central. Also, too, Discord link if you are interested. The link is down below. You can see what we're trading, how we're trading, what we're doing with the market, how we're doing with the 30K account, what we're doing long-term buying opportunities every single day. It's all there as well. So, again, the first thing that I'm identifying, right? So, ideally, in a perfect world, what I wanted to see was a break, retest, push down, right? That's like perfect world. Now, this is actually a weaker scenario, and it's really important that we recognize what's happening this week. I'm always trying to stay aware of what's coming, right? So when I look at data, I'm not looking for 2 months in advance. I'm looking at like this week, short term, right? So we know CPI is coming. Okay. We know oil's been an issue. All right. Now we're pushing down, and basically since the 7th, you've kind of bounced, from Thursday into Friday. Okay. Now, very clearly you can see forming the potential bear flag, right? Nasdaq, very similar. You're below 15.35. We mentioned all these levels, 40.60 or 44.60 on ES, 15.35 on NQ. And you are ending the week with this 4-hour bear flag. Concerning. Very, very concerning, right? Now, this key level here isn't as key, in my opinion, as the June 16 highs, okay? So that's where we're moving. So I want you to be aware of a few things going into this week. Primarily data. Into data, I don't think you have to be super concerned with downside. I don't. Unless you have Fed members saying specific things about that. So I don't want to address that. After data, if CPI comes in hotter than expected, meaning higher than expected, I do anticipate some downside, some slippage, right? I do see this bear flag playing out towards the downside if data comes in bad, right? So I just want to make that really clear. I 100% see that happening. But on the contrary, why I say I don't want to trade downside or expect downside before data is because what indexes and what equities in particular are doing. I'm just going to run you through a laundry list of names. Amazon, holding up. Higher highs, higher lows since, basically since August 25th, right? NVIDIA and semiconductors, I'm going to be unbiased. They're the worst looking right now. You're back at 40.50, major level, big bounce here last time. But it's important to realize semi is like the weakest right now. A little bit deeper. We saw what really led the downside this week was the Apple news, right? Drop, buying back immediately. Okay? A little bit deeper. Meta. What's happening there? Really holding up. Again, since the 25th, back to the upside, the track. Clearly back to the upside. Right? Microsoft, another one of the big mega caps. Clearly, August 18th, better than the 25th, still going up. Right? You're going to see this ongoing trend. And you can go through the laundry list of all the names. Tesla, go here as well. Since, again, the 18th, 25th, still to the upside. Right? So these are things you need to be considering of where you're at. Now, granted, you had a little bit of downside recently, but still, you're in that overall trend. You have to be able to acknowledge that, right? And so that's where things get tricky, is that you're seeing indexes getting kind of hammered, but you're not seeing it line up with the major equities. And what this has typically led us to believe in past cases here on the channel where we made money, an opportunity, was this was kind of just a pullback on indexes, a little bit of a cool down before another leg up. Now, I also want to paint this picture too. If CPI comes in better than expected, which I don't think is super likely, but if it does, comes in lower than expected, then I think there's a real possibility you get a lot of good sentiment in the market. Because as of right now, you're already seeing like a 90% chance of a pause heading into the Fed meeting. The Fed has made it very clear that also too that you have two data pulls coming for CPI, the PCE, PPI as well, right? So they made it very, very clear that we're going to have a lot of data going into this to make our decision. So I think it's very important that CPI is kind of the last thing before that meeting. But now more than ever, based on the data that's happening with oil, right, and energy, it leads me to be concerned going into these data pools and the next Fed meeting. And this is kind of the first time in a while that I've been concerned, right? So again, really quickly looking at crude, just so you can see CL1, or you can look at US oil on TradingView, doesn't matter. Crude, I mean, it's been an absolute monster. It's been an absolute beast, right? Since essentially, beginning of July. Hard bottom, you're pushing up, you're breaking out, higher highs, higher lows, clearly established. One of the best looking trends. Now, some people are saying you're stalling out here. I don't believe that for a second. My target is locally 92 to 93.5. That's where I'm looking for us to go. It wouldn't make sense for us to randomly get rejected here unless some news came out fundamentally from OPEC or anything along those lines. So that's very important to know. Very rarely do you get trapped in an illiquid zone and just randomly reject. Usually when you see that, it's because fundamentally you're not seeing a lot of buyers or sellers in that particular area, or you're seeing a lot of weakness, maybe a trap. But I don't believe this is a trap on oil, specifically the commodity. We need to understand that. Maybe another sector could get trapped, but I don't see it happening with crude oil. I just don't. And there's logical reasons for this to be going up based on what we've covered in previous videos. So it's important that we're using all the information that we've gotten from the past few weeks, and we're able to make a sound decision and a sound understanding of what's happening here. Okay, so all that being said, what is my viewpoint? What is my game plan going into this week? Let me clarify. Okay, so quickly, number one, I think beginning of the week, you have potential for upside, specifically on some of the safer names we've mentioned. Amazon, potentially Microsoft into 338. Meta's been hovering over 300. You've seen a few tests of 304. Apple as well, very beat up, right? Apple, I think buyers are trying to get back into it, especially with the new event coming up and what they're doing all with the new iPhone. This is probably your biggest jump in iPhone in the past 2 or 3 years. Okay. Now, as we head into the middle of the week into CPI, I think you have to be more concerned. I think you have to be more cautious. But what I will say, because again, it's been like a 2-month period, if you don't remember, since we had a Fed meeting. This data has, again, like I said, last piece of the gauntlet, right? It's going to give us a lot of either answers or concerns. And what does uncertainty mean in the market when we have concerns, when we don't really know what direction? Typically means downside. So you need to be prepared for the potential of that said downside. Because I very much am. I am highly concerned. I am highly aware of what could and what can take place if this data goes bad, right? So again, going through the week, the same thing's been said. I've been saying it on Twitter for you guys nonstop. When you have this type of market, it's get in, get out, take your money, run. You get a nice IV push, you hit your price target, you don't hold. If at the bare minimum, you cut half, you move stops up as quickly as possible. That's been the going game plan. If I'm in a trade, it's probably not longer than an hour. That's just the way the action's been. You've seen it both ways. Traps to the up, traps to the downside. We've seen it with the volume, piss poor. A lot of it, in my opinion, is indecision, right? It's a lot of unknowns going into the end of the year. Now, even if this data doesn't come out great, do I think this is going to push us into all-time lows or 52-week lows? I don't. People are going to get mad at me. They're not going to like that I just said that. They're going to be like, well, Tyler, you don't understand. Michael Burry, this is the worst market we've been in. It's all scam. It's all a con. Well, again, if that's what you believe, if you actually believe that this is a scam, a con, and that it's being manipulated to hold up, I'm just telling you right now, as we go into the last election year, or the last term for Biden, right? We're going into an election year. Typically, we perform well. I'm just saying. And it's very much on the side of Biden and Democrats to try to push this policy as well. So not even me getting political. This is just a point of me trying to make money in the market. So we need to be able to understand what's at stake. And you need to understand that the government is going to be doing all that they can to keep this market afloat. And what's going to be their speech come election time? Well, we saved the market. We bounced back at record speeds. We bounced from lows, right? Haven't we already heard it from them? So I ask you to just question a little bit your bias. Like, I'm questioning my bias. I like what's happening with earnings. I think the market, yeah, it's getting hit as far as the overall economy. But the way that we're still providing earnings, the way that, the market is still kind of thriving on the other end of it, and consumers are still spending, it's pretty crazy. The way that unemployment is still rising, but earnings aren't missing by crazy numbers. Unemployment's rising while growth is staying kind of maintained. I'm just saying, that's not a perfect world, but it's a world you like to live in when you're trading stocks, whether you like it or not. Okay, so those are things that I am looking at here. I think it's very big, very important that we are observant going into this week, but we need to understand the implications, right? If you're trading to the downside, I think you wait until the middle of the week, right? You wait right either before CPI or at CPI to trade it. And in my opinion, you're not going to miss a move. If CPI comes out bad, it's not going to be a one-day drop. You're going to see a little bit of a trend change. You're going to see some major levels most likely tested. Willing to bet that, okay? At least until the next Fed meeting. So that's my viewpoint on it. There's no reason to jump the gun. There's no reason to even take a side yet. You're bouncing at some levels. Equities are holding. Very weird behavior. But it's important to realize, be patient. Stop trying to get overly aggressive. Stop trying to take from the market. Start trying to take what the market is giving us. I love saying that because I think it's something that as traders we need to get used to and we need to understand. Have a good one, traders. If you have questions, comment down below. I'll see you tomorrow, maybe even Monday. And make sure you're following on Twitter because I'm having a lot of updates, a lot of charts. The link is down below. Again, have a good one.